Hey everybody, Jeremy here. Sunday, July 2nd. Futures have opened, and I'm bringing you the market bias report for the week ahead. Starting off with our forexfactory.com economic calendar, we see important data coming down the pipeline this week traders need to be aware of. PMI data on Monday, and a reminder to everybody, Monday is going to be a half day trading leading into the market being closed for July 4th on Tuesday. So market is closing at 10 a.m. Monday on the 3rd. Will be closed all day on Tuesday, the 4th, and then reopening Wednesday through Friday for the remainder of the week. PMI data on Monday is going to be important. Wednesday, we have OPEC meeting and FOMC meeting. And it's expected that we are going to get probably a 25 basis point raise in July from the Federal Reserve. There's some speculation they might pause again, but I have a feeling that it's going to lean towards the 25 basis points, if for no other reason than Jay Powell wants to save face from being behind the ball leading into inflation, and probably wants to stomp his feet a little bit on this, even though we probably don't need a rate hike right now. But I'm assuming that we are going to get one. Anyways, this is not a rate hike decision meeting. It is just releasing minutes. So that's going to be less important than some of the other things. The PMI on Monday, the job openings and unemployment on Friday, Thursday and Friday are going to be the ones that I am looking at. So anyways, jumping right into our charts here. Futures have opened. It is currently in the green, although not by much. We're up 0.03%. That could change at any point. We are currently right at resistance from the previous pivot. We got that really nice consolidation pullback that we've been looking for the previous week. We got our trigger on Wednesday, and then we ramped up, and Friday we got a huge bullish candle. It's interesting to me that we didn't have an oversized volume move on that, even though we had a lot of buying pressure. The volume was average. It is still overextended, so it kind of tells me that we might be nearing the highs again here and may be in for another consolidation or pullback. In my head, I am kind of anticipating some kind of little rising wedge pattern here where we set higher lows and equal highs. If we do break out, you'll see I have an alert at 44.93 and 75 cents. If we do break out of that, my next two targets are here on the chart. 45.50 and 45.85 are the next stopping places that logically make sense. And I will kick this out to a weekly chart so you can kind of see why I chose those levels. This is kind of bracketing all of the wick nonsense and previous resistance that we'd had from back at the beginning of the year in February and March. So if we do break out of this level, that's kind of the next stopping point. But like I said, I'm kind of anticipating some consolidation here, pretty much between 4,400 and current levels up to around 4,500. Going out to the NASDAQ. Pretty much the same exact chart. We got the pullback. We broke on Wednesday, consolidation on Thursday, big prop on Friday, and Friday's candle actually was even lower volume on the follow through there on the NASDAQ. So that just tells me that maybe things are still a little overextended and we still need some sideways action here to clean it up, or another retracement to clean it up. So this is going to be a week focused on individual stocks and maybe individual sectors, but the actual indexes themselves have run enough. There's not really a potential for a new trade here this week on either the NASDAQ or the S&P. If we go out to the Russell has room to catch up. We got the pullback that we wanted, although it was a little quicker than I had anticipated. This was the drawing that I had put up a week or two ago saying this is kind of the retracement that I wanted, followed by the next pop into a higher level of resistance just over 2000. I think my target was up to about 2020. Ideally here, I would like to see this consolidate now, either consolidate and pull back into the like 1880, 1875 zone, consolidate between there and the breakout channel at about 1925 or 1930. If we do get some consolidation and sideways action here over the next few days and then resolve to the upside with a breakout above 1930, next stop looks like we have about a 100-point move up to about 2020. So that's kind of what I'm expecting from the Russell 2000. If we drop this out to a weekly chart, it actually cleans that up and it makes it look quite a bit better. I am kind of anticipating that at some time in the next week or two, we are going to be probably testing up to the 2020 area, back up to the previous two pivot points here. And that is going to set up a very interesting chart. Hopefully we get there in a methodical fashion. We don't just rip to it, because if we rip to it, we're going to be overextended for that, and it's going to be hard to see a further continuation pattern breakout. Hopefully we get some consolidation, a move up, and then more consolidation, setting up that next breakout, because this breakout is really going to be one for the books. That's going to be one that I am very, very intensely focused on, if and when the price gets there, to see how that forms up and if we have a significant trade that we can take on that. I'm kind of expecting that we're going to see that in the coming weeks, but we have to get through this coming week first. Pushing out to Dow Jones. Dow Jones, still kind of a mess, honestly. It has gotten above and confirmed above our diagonal resistance. I dropped this back to a weekly. You can see we had this diagonal channel going back to a year and a half ago now. So we've been fighting that diagonal resistance for a year and a half. We are above it right now. Sorry about that, guys. I have an alert going off here on a Bitcoin chart. My bad. I hope that didn't blast everybody's eardrums out as it did mine. So we are up above this resistance channel. I would like to see kind of a high base form here. If we get a high base underneath 34,970 and then a break above, we could see some consolidation, or not consolidation, we could see some price movement to the upside. Unfortunately, even if we get that break, we have a bunch of little wicks and resistance up above this channel, so we don't really have clear air to play to the upside. So I think there are other better areas of the market to play in that regard that might have better risk to reward. Going into Bitcoin, since we just got that alert that blasted our eardrums, it has been consolidating here. On the weekly chart, we have a little kind of flag pattern, or pennant pattern, I guess I should say, developing. On the daily chart, it is still hanging out in this range, high basing, not doing anything wrong. This kind of crazy wick candle here was on Friday, and that had to do basically with the SEC declining a bunch of financial institutions' applications for a Bitcoin ETF. It was highly anticipated. They said no, it wasn't, the applications weren't clear enough, and it sent Bitcoin spiraling. And I'll actually drop this into a 15-minute chart so you can see the chaos that ensued there. It dropped about 6% in the course of half an hour. And that's a massive move, even on Bitcoin scale. So anyways, we have fought back and we are now right back into this consolidation zone. We have held above the rising 9 EMA, which is kind of all important there. If we do get a breakout above 32,100, I see this going up probably to 35,000, maybe even a little further. So interesting chart here. If you're not playing the Bitcoin futures or Bitcoin directly, you can always do things like Mara or GBTC is a spot ETF, or not a spot ETF. This is an ETF based on the futures. But honestly, above Bitcoin, I am actually more interested in Ethereum. So if we look out in Ethereum, it has a really nice defined breakout channel here around 1977. If we break out of that, I see a fairly good chance of a run up to 2100, maybe even pushing back to all-time highs. This thing has set up, the MACD is solid. It's looking really, really good. So anyways, Ethereum is very interesting to me here. Bitcoin's also interesting to me, but Ethereum very, very much so. One more thing I wanted to point out, actually, I just remembered on the, oh, it wasn't on that. Never mind. That was on silver, I think. Nope, it wasn't. I take that back. When I see the chart, I will remember what I was going to say. There was a divergence in one of the MACD charts as I was prepping for the video that I wanted to point out in case anyone does not know what divergence or confirmation from a MACD chart looks like. So while we're on silver, might as well go ahead and cover it. We've pulled back to rising support on a weekly chart and also this all-important rising 200 period moving average. If we break back above the 20 period moving average on the weekly around 2366, that is confirmation on the weekly chart, and I'll be really interested in that. We actually have potential to trigger on an aggressive trade on silver before that, somewhere around $23.11. I wouldn't fault anybody for trying to play this little double bottom pattern right here on silver. That's actually quite interesting to me, having a really tight stop underneath the 200 period moving average and just playing maybe a pop up to 2352, back up to the rising 20 period moving average. Outside of that, guys, let's look at crude light real quick. If my chart will load, there it is. Nothing really to see here. We're still holding our support zone down at the lower ends of the channel. If we drop this out to weekly, it's still getting pinched between the 200 period average and the 9 and 20 that are both falling still. Eventually, this thing has got to break one way or the other, and when it does, there's probably going to be a pretty significant move. But it's going to be probably pretty hard to catch, at least how it's been trading right now. It's not been a very easy or very clean chart. There isn't really a good trigger level. Even if we get back above the rising 50 here at 72, then we're staring right at resistance at 72.80. Then we're staring at resistance at 73.60. So there's just so much resistance overhead here. This is going to take quite a while to set up. I really don't see a trade happening on crude light until we actually get back up to about 75. If we can consolidate, clean up here for a while, and let this 200 period moving average continue to converge over the next probably month and a half or so, and then line up a convergence of breaking out of this 200 period moving average with the $75 mark, that would be very interesting to me. Other than that, I'm waiting. Don't see anything here that makes me want to trade anything crude light for this week. Going out to gold, nothing to see here. We've been kind of grinding in this kind of sad bearish downtrend for a while. We are bouncing off the 200 period moving average on the daily chart, which is interesting. But on the weekly chart, we are below our moving averages. The 9 is rounded down. We're below our 20 period moving average. And there's just really nothing to see here. If we do get above 1970 again, that might be interesting. Actually give myself an alert right there. Other than that, a deeper pullback down to like 1850, 1860 might be interesting to me, but we'll have to see how that sets up. And finally, natural gas. Going out to our natural gas chart. This thing, we've been talking about the reversal on it for quite some time. Got our doji here. We have a little bit of a bearish candle starting to form. The doji on the weekly chart signifies kind of equality between bulls and bears. It's an indecision type candle. I wouldn't be opposed to us having a bearish week here on natural gas to set up a potential for another bullish trade after the retracement concludes. I'd like to see it come down to like 2.6, something like that. We're currently at 2.725. And that might not seem like a lot, but that is actually a very large move on natural gas. Even like a 10 or 12 cent move on natural gas futures equates to several $1,000s worth of gain or loss. So anyways, I'm hoping that this just kind of continues down, comes back down into maybe the 2.6 area over the next week or two, and then sets us up for an aggressive trade back into the resistance here at 2.875, and then a breakout from there. I'm just going to go ahead and clear those drawings so you can see that a little bit clearer, but this is kind of what I am looking for there. Other than that, let's look at market internals real quick. The VIX is kind of dead right now. I don't even really know if I trust this indicator much anymore. Usually anything below 20 signals low volatility. We've been hovering down around 13.75 for a while now. And let me put this out on a historical chart. It has been basically since a year and a half ago that we've been down at this level. It's not out of the ordinary for it to get down here, but with the current market environment, I am surprised with all of the recessionary talk and the inflation talk that this is not showing that there's a little bit more fear in the market. It's interesting to me that the bulls have just really taken off in spectacular fashion here over the last 6 months, and really starting from the beginning of the year. We got the kind of double bottom here on the longer term chart, and it's just been off to the races. And it's hard to say that we aren't overextended. We're up 15.6% on the S&P in just the last 4 months. And that's a monster move. Usually the average move of the S&P 500 for a year comes in around 10. So we're about 150% of that right now. Last but not least, look at the other market internals here. Our advancing declining is showing bullish. That's confirming potentially another leg higher. And our AR high low that basically shows how many stocks are setting new 1 month highs versus new 1 month lows. We had dropped back into the neutral zone here on the last period of consolidation over the last week or so. Got a pop above, and this is signaling it's off to the races again as well. So looking back at the S&P, that would signal that if nothing else, we'll probably get some consolidation, or we might actually push and try to test that for 45.50 level. Like I said, ideally, I want to see it chill the F out for a little bit here before it breaks out. We'll see if we get that or not, but that's what I'm looking at. And I'm not going to be playing this break except for maybe a day trade if it does go ahead and break, because I want more consolidation. It is overextended here on the RSI, so I'm not particularly interested in anything other than potentially a day trade there if it does break. I hope that helps, guys. Enjoy your trading week. Enjoy your holiday off on Monday afternoon and all day Tuesday. And as always, let me know if you have any questions in the comments.